Based on the third quarter earnings that we've had so far, what kind of read are you getting on where the U.S. economy is headed?
We really don't have a clear-cut trend on certain headwinds that are still around that will affect consumers as well as corporate America. This quarter, more so than other quarters, is going to be looking at the forecast to get a gauge so that we can have some clarification, because we don't have clarification at the moment in Europe, and we surely don't have clarification all the way in Washington, D.C. I think that it's going to be kind of not all that great. But that's already reflected in some of our stock index futures as well as the stock indexes.
What are Dow and S&P futures telling you about what's priced into the market?
If you remember 3 months ago, in our last earnings, we were higher than where we are now. We were around, give you an example, S&P futures were around 13 and a quarter to 1340, and we went all the way under 1100. So part of that forecast or a front-end, back-end analysis is priced in already. Europe and the sovereign debt has been probably a bigger influence than any individual company earnings or even sector for that matter.
What kind of tone do you read that company executives are sending to their audience?
I think they want to be optimistic. It's in their best interest to be optimistic, but when companies are not hiring, they're not that optimistic. You can increase your dividend and profit margin by getting lean and mean like a fighting machine, and that means lay off and cutting waste and getting productivity and efficiency up. But that doesn't mean that your general revenue is increasing. That means you've lowered your overhead. If they don't even know which way we're swinging, then it's very difficult to plan for the future.